Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock with news that despite the expectations of bears, the US labour market hasn't wobbled yet. US jobless claims rose 213,000 and a small dip from the previous week. This was what markets were expecting and still no indication of any special American labour market stress. There are now less than 1.9 million people on these programs. This overall little change result is actually quite impressive, given all the news of growing tech and start-up layoffs recently. Sales of new US single-family homes rose 1.1% in February from January to an annualised rate of 640,000, the highest level since August last year. Given the upturn in the existing home market, analysts had expected an even stronger result, however. And the industry will be disappointed because they have more than 8 months of unsold inventory at present. And Canada's population is now approaching 40 million in a fast 2022 spurt. They added a record 1 million new people over 2022, largely boosted by immigrants and a substantial intake of Ukrainian refugees. The expansion is a stunning 2.7% in 1 year, their fastest ever post-World War II. And Taiwan's industrial production fell a sharp 8.7% in February from the same month a year ago, and Taiwanese retail sales slumped in February from January, but are still up 4.2% above year-ago levels. This is quite good, in fact, given their inflation ran at 2.4% over the same period. And Taiwan's central bank raised their policy rates by 12.5 basis points, with their key rate now 1.875%, with a hike that wasn't expected. The EU's Consumer Sentiment Survey for March was out overnight, and while it remained quite negative, it remained near its best level in over a year. And overnight, 3 European central banks reviewed their policy rates, and 2 mimicked the US Fed with a 25 basis point rise. Norway raised theirs to 3%, and England raised theirs to 4.25%. Norway has inflation running at 6.3%, and England has it running at 10.4%. And the Swiss raised their official rate by 50 basis points to 1.5%. They also reminded investors in Tier 1 bonds that they agreed to have them treated as capital in the event of a bank failure, and those who invested in Credit Suisse Tier 1 bonds can have no complaints because that is what they agreed to. And freight rates for global containerized shipping fell again last week, extending the long decline. They fell another 2% last week to be almost 80% below year-ago levels and are now 35% lower than 10-year averages. Bulk freight rates, which have been rising recently, topped out this week and are also falling now. The US Treasury 10-year yield starts today at 3.44% and down a large 11 basis points from this time yesterday and back to early February levels. And the price of gold will open today at $1,995 an ounce, and that's up a strong $47 from this time yesterday. And that is a new 1-year high for the yellow metal. And oil prices start today a little softer from yesterday at just on $70 a barrel in the US, while the international Brent price is still just under $76 a barrel. And the Kiwi dollar is up almost 0.5 cent against the US dollar, and now it's 62.9 US cents. Against the Aussie, we're almost 0.5 cent firmer too, at 93.5 Australian cents. Against the euro, we're a little firmer at 57.7 euro cents. That puts our trade weight index up to 70.6 with a 20 basis points gain. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.